Good evening, everyone. Darshan this side from Leap Quest. I'm not going to start this session by talking about rankings, colleges, or application timelines because none of those are the real decision. The real decision is far from consequential, and an MBA today is a 1 to 2 crore capital allocation. And like any serious capital allocation, it should be evaluated with precision and not just emotion. What most applicants don't realize is that they're not entering an education market, they're entering a capital market where risk, return, timing, and positioning determine outcomes. And like any market, there are inefficiencies, there are overpriced assets, there are undervalued opportunities. And those participants who win simply because they understand how to think and not just what to choose. This session is designed to shift you into that category where you're no longer reacting to rankings, but evaluating decisions with clarity of someone who understands the economics behind them. This report was built on a very simple but very uncomfortable question. What MBA actually pays you back and how fast? Not which one sounds impressive, not which one ranks higher, but which one makes financial sense. The discomfort in this question lies in the fact that it forces you to detach from identity driven decisions and anchor yourself in outcome driven thinking. Most applicants unconsciously optimize for validation, brand names, peer perception, social signaling, but those variables have very less correlation with financial recovery. When you invert the lens and start the payback timelines, the entire landscape reorganizes itself. Schools you once prioritized may fall out, and others you overlooked begins to stand out. Not because they are in better in reputation, but because they are superior in economic efficiencies. The industry is built around one objective, getting you admitted. Our work begins where that objective ends. Admission is a visible milestone, which is why it is heavily marketed, celebrated, and optimized for. But financial outcomes are delayed, complex, and less visible, which is why they are often ignored in decision making. This creates a structural blind spot in the market where applicants are guided towards decisions that maximize acceptance probability and not just long term return. By shifting the focus from admissions to outcome, you fundamentally change the nature of the decision from can I get in or to should I probably even go? And that is far more powerful question that you need to ask. And this framework is particularly relevant for specific profiles. At 3 to 7 years of work experience, you're at a unique inflection point where the marginal benefit of an MBA is at its peak. But so is the cost of stepping away from the workforce. This makes your decision highly sensitive for both timing and structure. For Indian applicants in particular, the exposure is amplified. Currency differences, loan dependence, and visa constraints all introduce layers of risk that must be actively managed. What means the margin for error is extremely low, and the quality of your decision making framework becomes disproportionately important. And like I've told you before, the question is no longer can I get into a top MBA? The question is does this MBA make financial sense for me? The global MBA ecosystem has quietly transitioned from a growth phase to a maturity phase, where costs have escalated faster than outcomes. This creates a compression in returns, making blind brand chasing increasingly inefficient. At the same time, access to alternative pathways like internal promotions, lateral moves, specialized masters has improved, raising the opportunity cost of an MBA even further. In this environment, the decision is no longer binary MBA versus no MBA, but rather which MBA under what conditions and at what cost structure actually justifies itself. The real cost of an MBA. So the true cost is not what you pay, it's what you give up. Opportunity cost is a silent variable that distorts most MBA decision. It is not visible in brochures, not discussed in webinars, and rarely calculated accurately by applicants. Yet, for mid-career professionals, it often exceeds tuition fees itself. When you account for foregone salary, lost promotions, and compounding career progression, the cost of stepping out becomes exponentially rather than linear, which means your post MBA trajectory must not only recover tuition fees, it must also compensate for the momentum you paused, and that is far more demanding benchmark. Most people chase the highest salary. Sophisticated applicants tag time to recovery. Return on investment is not a static number, it's a function of time. Two programs can deliver identical salaries yet have vastly different financial outcomes depending on how quickly they allow you to recover your investment. This introduces the concept of velocity into decision making, not just how much you earn, but how quickly you reach financial equilibrium. And once you begin evaluating programs through this lens, you naturally gravitate towards structures that optimize both earnings and efficiency rather than just headline compensation. Let's look at the framework. If a school fails even one of these, it doesn't enter the conversation. Constraint-based decision making is what separates high-quality strategy from reactive selection. By defining non-negotiable filters, cost ceilings, salary thresholds, break-even timelines, you eliminate emotional bias and force discipline into the process. This not only simplifies choices but also protects you from downside risk, because in high stake decisions, what you eliminate is often more important than what you choose. And this framework ensures that every option you consider is already pre qualified for financial viability. Let's look into the top 20 schools. These are financially efficient MBA instruments. What these schools represent is not just academic excellence but structural alignment with high value career pathways. This sit at the intersection of cost efficiency, hiring strength, and geographical advantage. Most importantly, they have a proven track record with profiles similar to yours, which significantly reduces uncertainty. Because the goal is to not identify the best school in abstract terms, but the most predictable pathway to a high value outcome given your starting point. We have picked up few affordable MBA programs across the world from India, Spain, Italy, UK, Germany, Asia, US, and Australia too. You can just have a look. I'll give you probably another 10 seconds for the slide. Okay, moving on. India represents a low risk, high speed recovery model where financial exposure is minimal and outcomes are relatively predictable. However, the trade off lies in the ceiling. While break even is rapid, global mobility and long term salary arbitrage may be limited compared to international markets. This makes India an optimal choice for candidates prioritizing financial stability and domestic leadership roles. We have two impressive colleges like ISB Hyderabad and IMA. You can look into the FT rankings, the tuition fees, and the post MBA salary, the break even time, and the key hiring sectors for both the colleges. Specifically, to know more about each one of these colleges, the top MBA programs in India, top MBA programs outside of India, we have conducted several webinar sessions, even the best one-year MBA programs in the world. All of that information is already available on our YouTube channel. You can refer to those specific topics. Europe offers a structurally balanced proposition, moderate cost, strong consulting pipelines, and relatively faster recovery cycles. Additionally, its geographical diversity and access to multiple markets provides a layer of optionality that is often underappreciated. For candidates seeking both financial discipline and international exposure, Europe often represents the most efficient middle ground. You have several colleges which are affordable with a higher ROI, which we have mentioned in the slides. Schools like SRD, IE Business School in Spain, SDA Bocconi, and Mannheim Business School in Germany. Let's look into the schools in the US. The United States remains the most asymmetric market, high cost, but disproportionately high upside. The key, however, lies in access, scholarships, positioning, and role targeting significantly alter the equation. For candidates who can navigate this correctly, the US offers not just recovery but wealth acceleration. For those who cannot, it becomes an expensive misstep. You have several good programs with a faster ROI, like Darden School of Business, Berkeley Haas, Kelly School of Business. In fact, Darden and Kelly offer the GMAT waivers also. But again, to know more about the best MBA programs in the US, the one-year MBAs in the US, MBA in US versus MBA in Europe, we have conducted several webinar sessions, which is also available on our YouTube channel. You can refer to that. Australia. Australia is an emerging arbitrage opportunity where global quality education meets relatively lower competition and strong post-study work access. Markets like this reward early entrants disproportionately, especially those who recognize value before it becomes mainstream. The combination of visa stability, salary growth, and the lower cost creates a compelling, though often overlooked ROI profile. Again, we have very good colleges in Australia too, like Melbourne Business School and AGSM in Sydney. UK and Asia, these regions functions as strategic gateways, the UK for finance and consulting access, and Asia for proximity to high growth economies. What makes them particularly interesting is their positioning. They allow candidates to plug into dynamic markets where growth rates, not just salaries, drive long term upside. This shifts the focus from immediate ROI to compounding career trajectories. Again, with respect to the top MBA programs in Europe or the top MBA programs in Asia, I had conducted a webinar session, which is also available on our YouTube channel. You can refer to that. To have a better insights with respect to the best MBA programs, the ROI, the kind of colleges and the kind of companies that will come and hire you, your post MBA plans, your short term plans. Basis on that, what are the best MBA programs for consulting, finance, tech, product, right? So you have several options, and all of this information is already available. So, how to use this report? See, you're not choosing a degree, you're choosing your next decade. Decisions at this level are rarely about information, they're about clarity. Most applicants already have access to the same data, the same rankings, the same reports. What differentiates outcome is the ability to interpret that information correctly, align it with personal context, and execute with precision. And that is ultimately what determines whether an MBA becomes a catalyst or a costly detour. All right. Now that we have spoken about where you stand and what schools really look for and the best MBA programs which are quite affordable with higher ROI, let's talk about what happens next. At LeapQuest, we keep this very simple and structured. This is where we understand you by value, schedule a free profile evaluation with us, your background, your goals, and how competitive your current profile is for the top MBA and MS programs would be looked upon, and you'll walk away with clarity on where you stand today. And once we identify the gaps and the opportunities, we work with you to build a career or a clear customized strategy and what you need to improve and how to position your story and what schools make the most sense for you. And then definitely we will start transforming your application. So this is where the real work begins, from essays and storytelling to positioning and strategy. We help you craft applications that genuinely stand out and not just good but memorable. And if done right, this process doesn't just get you admits, it helps you unlock scholarships and land at schools that actually match your ambitions. And if this is something that you're serious about, the best first step is to get that evaluation done. It's low commitment but with high clarity, and that's where everything starts. You can visit us on our website at theleapquest.com, or you can drop in an email to info@theleapquest.com, or you can just give us a call on 93532 56447. In case if you're visiting our website, there is a evaluation form, the profile evaluation form. You can just fill it up, and one of our consultants would be getting in touch. We'll have an interaction with you, give you a plan of action for the upcoming 2027 intake, be it the fall, the spring, the round one, round one versus round two. So we'll give you all the possible information that is required to build your next few months while you prepare for your GMAT. So also with respect to the pre-GMAT phase, the post-GMAT phase, the profile enhancement, there are a lot of information that is available on our website, on our YouTube channel. You can just refer to that. So yes, I hope this session was slightly informative. Like if anybody's looking at an affordable MBA programs with lesser risk and a higher ROI, I'm pretty sure that you did get some kind of information out of this session. But again, to have a structured plan of action, reach out to us. We'll be more than happy to assist you.